Good stuff.
Okay.
All right, so maybe we can start. I'll give a quick kickoff here. So welcome everybody. My name is Aidan Augustine. I am a proud board member of Start Gnv. Start Gnv is the organization putting on this event. So we've been holding a series of these AMA Ask Me Anything virtual events during the pandemic, where we ask community leaders, business leaders, investors, entrepreneurs, local government. We've had a whole spread, and we invite folks to jump in the hot seat and answer your questions. So the theme is Ask Me Anything. So it truly is an open forum, but obviously keep it civil. Not that we have any concerns about that. So just as a quick background about Start Gnv as an organization. So Start Gnv is a 501c3 nonprofit focused on growing the innovation ecosystem of Greater Gainesville. So really focusing on fostering an environment where early stage startups to mature tech companies and the organizations and institutions and people that support them are enabled and set up to succeed. And we are focused on the Greater Gainesville area, trying to truly build a community here around tech startup innovation. So start off, I'd like to thank the Start Gnv annual partners. Without them and their generous support, programs like this would not be possible. And so please join me in thanking Hutchison PLLC, 352, OP Software, Feather, Infotech, Santa Fe College, Trimark, and Better Me Productions for being annual partners of Start Gnv. Did I miss anybody? Hope not. But one of the board members maybe can let me know, and we'll make sure they get a special shout out to make up for it.
That's right. If you left them out, they'll let you know.
Great. All right. So I have with us here, or we have with us here, Jim Stallings as our special guest. I'll read a quick intro, and then you can kind of take it from there. But Jim is the founder and CEO of PS27 Ventures, a firm that invests in early stage technology companies. Jim has been directly involved in starting dozens of new ventures in FinTech, HealthTech, e-commerce, and software as a service. He believes that innovation should be the core offensive strategy of any company. I like that. Either disrupt or be disrupted. So thank you for joining us as we discuss Jim's experience, venture capital, and any other questions you would like to ask him. So, and I will start maybe with the first question, and then you can kind of take it from there, Jim. So I heard you had some exciting news just recently announced. So whatever you're willing to share on that, and then give us a little bit of background about yourself.
Yeah, very good. Well, first of all, thank you for having me on the program. And I like this format, ask anything, where you can't prepare for it. You just sort of, and you go for it. The other thing is, I also want to just congratulate you all on this program for being, where you are in the middle of a great market there in Gainesville. You're right there at the university, and Florida is hot right now. It's going to get hotter, but it is really, really moving. People are moving to the state. People are moving to your market, our market, the South. It's really fun to watch. The pandemic has just opened up everyone's eyes that you can work anywhere, be anywhere, you can contribute from anywhere, and this is such a great market. Lots of talent coming in. So I think your timing is just right to be launching this and doing this for your constituents and for entrepreneurs. They need places to go and people to work with. I will tell you, this has been an exciting week for us at PS27. My team and I has had the opportunity to launch a venture capital fund. I think it's the first one in Jacksonville, I believe. I don't think the first one, the people are still alive, but
awesome.
We announced just yesterday a $20 million VC fund. It's live, it's active. We've raised a substantial amount of the funds already. We've got tremendous interest in coming into the fund, both from local and from people. I've been surprised. We've got investors coming in from around the country that have asked to be a part of this. And part of it, I think, is because they see the market growing and they see the attractiveness, and we live in this market and we get to see and work with the entrepreneurs. So it's been big news for us. We are busy. We spent hours today with a team from outside of this market about their project and their product. We have a multi-step program that they have to go through to get selected, and they're in the final step. And we went through a scoring exercise just a little while ago. it's just fun to watch these companies tee up and get ready to get investment and grow. And our mission is really to see that their dreams come true. Of course, we want to return an investment to our shareholders, but we also want to see these companies take off and they start with 2 people and they have 20 and then there's 200, and it's just a marvelous thing to watch, the growth. So that's the big news for us, and we don't believe this is the last of it. We think we're already getting interest for the next fund. So it's been a very busy week so far. I've got a busy day tomorrow talking to people in the media and as well as other investors.
Awesome. Yeah, that's really exciting. I would love to hear a little bit more. I mean, is there a investment thesis, in terms of, is it focused on Florida or the Southeast? Is it focused on specific industries? And how about stage? I think there's probably some folks in the audience here that might be interested to know some of those things. So just talk a little bit about the investment thesis, and as much as you're willing to share.
Sure. Well, first of all, we've been at this for 8 years, so we've got a new fund, but we've got a fund number 1 that we've been working for 8 years, and we've got several, a couple dozen companies we invested in over that. One of the things that we decided to do way back when was, let's figure out how to work with and how to grow and how to mature a startup. And we invested in different types, different industries, different sizes, different stages. And we learned what does a startup really need over a year and a half. And we designed something called the PS27 program or the PS27 process. And it's really an integrated approach to helping a company. So it's not just capital. It's a whole series of connections to partners in an ecosystem around the startup. It's also financial help, marketing help, branding help. We actually help them with defining their purpose and mission and reason for being. I mean, these are sometimes deep conversations, right? And then it grows into a strategy and a budget and a cadence. And after about a year and a half with us, the company is then ready for real money and real growth. So we put in over those years somewhere around $250,000 each in each one of the companies, but we work with them. And we built our team. We built out resources, bookkeeping resources and governance strategies, and helped them build a board and helped them build marketing plans and brands and intellectual property. So we now got an ecosystem that we bring a company into when we invest. And the good news is we now have a $20 million fund that'll allow us now to go take this to 20, 30 new companies. So we've learned, there are a lot of scratches we got along the way. Every one of them didn't work out. But we feel like it's given us the right now to go to investors and go to entrepreneurs and say, we sort of know what we're doing, and we want to share that process with you. So to your question, the thesis is very simple. Our projects, we expect them to be in market. So you got to go build something. So if it's code, you got to have some code. You got to have a solution. You got to have a few customers. You got to have a team. It could be just 2 people. You got to quit your job. So it can't be just doing this like in the backyard on Saturdays, right? So you got to be all in, and you need to have put in something, time, effort, a little bit of your money. And what you're looking for is capital to scale, that next level of growth. So $500,000, $200,000 of capital, plus you need help with go-to-market. So you're trying to figure out, what's my demographic? What's the vertical I'm going to go after? Who are my strategic partners I'm going to leverage to go quickly? And it may be that you're going to the next version of software or the next round of products to be companion products to your original core solution. So that's what we figured out. That's our strength, and that's where we invest.
So it sounds like you're pretty hands-on. You're adding a lot of value beyond just the financial capital, man. You're really helping them with those early stage business plan questions and the initial kind of build out of their team, of their process, and so forth.
Yeah, and that's different. That's what's unique about PS27 is it's very immersive, we call it. We're sort of like professional trainers. We work very, very closely with the company. They hate us sometimes because we make them do extra push-ups and sit-ups and, and the muscles hurt. But, in the summer when you go to the beach, and you want to show off your abs, you love us. So it's sort of that kind of a deal. We get to know them very well. They get to know us very well. More importantly, they get to know our system and our ecosystem and our partners and the people that are upstream from us that one day could either invest or buy or merge with the company. And that's part of what we do. We don't invest in a lot of companies. So we don't have, our model isn't spray and pray like some firms that, you raise capital, you deploy it very rapidly, and you hope that 1 out of 10 work. We believe, and we do have a higher hit rate. The other thing that's very different is we're outreaching to, women and people of color. We particularly want to make sure our portfolio reflects what we seek to become. And we've got a pipeline. It's very rich and diverse, and we're very proud of that. The other part of the answer to your question is we like Florida, but we get pipeline from all over the country. As a matter of fact, all over the world. We'd like to major with companies in the Southeast. Our model is if we can get in a car and drive there in one day, that's how far we want to go, because we literally want to get in a car and drive to visit the company if it's not local. So that's what we look to do.
Right. Awesome. And a question that just came in, to the private chat to me real quick. So if a product has created a product that can't be sold until there's been significant capital investment, for example, biotech, or maybe like hardware, talk about that. Is that something that you're still interested in, or do you have a preference for, like you said, something that's already in market, maybe has lower startup costs, has already proven something? Just wanted to poke on that one.
Yeah, I mean, I want, so some of these products have long lead times, right? You've got to go through an R&D phase. You've got to do a pilot. You've got to get clearance from the FDA or some government authority, state or federal. We understand that. Usually if we're interested in the technology, particularly the market that it serves, we'll go find a partner. So we've reached out. We're fortunate to have in our market some incredibly resourceful organizations like Mayo Clinic, University of Shands Hospital, just a lot of FinTech companies, right? So what we try to do in a case like that, if there's an R&D phase that's extended that requires substantial capital, we'll reach out to one of those partners. And they will put something in, either money or time or expertise is usually what's needed. And then we follow on with capital. So some of these are, longer, but for products that are going to serve consumers, products that are going to serve small, medium-sized businesses where you can build it, and we like that space, we outreach. The verticals we've chosen for the fund have been around health technology, around e-commerce plays that are B2C type plays that you can get in market quickly and grow on an established platform like Amazon or Shopify. We like certain parts of FinTech. We're not into crypto, but there are solutions in the market that leverages crypto. We're learning more about it. We do like sustainability. That's a new segment for us. We're in an era now where companies are going to be expected to generate their own energy, or at least be carbon neutral. And there's work to do that for most companies, particularly small businesses. Big companies are figuring out how to do it, but small businesses are going to need help. And we think there are lots of solutions that are going to come for that. And of course, we like software. So software as a service, we've got quite a few of those investments.
And you just touched on this in the sustainability front, but there was a question that came in just asking to elaborate a little bit more about what you look at there. So it sounds like, energy creation, but also, is it the distribution thereof? Is it, software enabling thereof? Is there any more you want to say around the sustainability angle?
Yeah, I think
what you're interested in there.
The entire distribution chain. Now, we're not interested in digging for oil. Okay, that requires enormous amounts of capital. That's not our space. But alternative energy, renewable energy types, hydrogen, fusion, I mean, you name it. We think the economics around this is going to get to a point where small business are going to start using and seeking other sources other than fossil fuels. And the packaging of it, the distribution of it, the maintenance of energy units, those are going to create businesses that don't even exist today. I mean, so, you know, we think of gas stations. There'll be charging apparatus at every company. You've got a medium, large size. I was at a company the other day, Miller Electric, and you would think that, you know, they're interested in sort of power lines and electrical sockets. These guys are big time into renewable energy, and they're experts in it. But if you go out front, you know, they're building, there's all types of energy collection and recharging. Companies are going to have to get fitted up for that. Why? Because their employees are going to expect it. Their employees are not going to work at places unless it can, you know, accommodate their lifestyle around electric vehicles. So all of that's got to get built, and there are going to be companies that are going to have solutions to enable that, and that's what we're excited about.
Awesome. I got a lot of great questions coming in here, so keep them coming. Everybody, please feel free to post in the chat or send them to me directly. One guy for you, Jim, is you know, some of the lessons learned from Fund One. You mentioned getting some scratches along the way, right? So you know, some of the winners, maybe some of the lessons of what maybe went wrong, or how has that kind of adjusted what you're planning to do with the second fund here?
Yeah. Oh boy, this is a whole book. I could write a book on these things, but I'll just start with some of the basics. You know, our team talked about this recently, right? Right before we started the new fund, we said, what did we learn in the, you know, fund number one? And it was very enlightening. And then we wrote it down. We sort of wrote down, okay, what are like the commandments, you know, to make sure we don't screw this up in the next fund. One of them was, we've got to invest in things that we know something about. So the economics sometimes are so enticing. Someone comes in, they've got a, you know, solution that is going to return a dividend, all the cash and a dividend in 18 months. And, you know, most VCs are greedy, right? They want to post a win. They don't care if it solves problems or not. And what we found was we just got to get into things that we really understand. So we made some mistakes. We got into areas we had no idea what they were. You know, for example, some people, you know, were coming to us over the years around the explosion. And, you know, a couple of years ago, cannabis was being legalized across a bunch of states. So retail distribution of cannabis was hot, and the cost to enter was low. Well, right now, cannabis distribution retail, it's saturated in some places. And, you know, it's not an attractive market. So, you know, that was probably not a good thing to get into. Then we got into, and this is pre-pandemic, we got into some retail distribution. This is a lesson we learned about distribution of product, consumer products, that, you know, brick and mortar is probably not where you start. You got to start online. And we sort of knew we start online, but Whole Foods was carrying this product. And we're like, we can't lose. This is Whole Foods. This is before they even got bought by Amazon. They were killing it. Well, it turned out it's really expensive in stores just to buy your way onto the shelf, to stay on the shelf, to fight every year to remain, you know, a category leader. So we lost a bunch of money selling ice cream on the shelf at Whole Foods. So are we recording this? I probably shouldn't say some of these things, but you know, it was lessons like that. Certain industries, certain products, certain timing is everything. We got in some businesses that were family owned. And I mean, I'll never forget, I had a meeting one day. We were going to invest in a company that was a family run business. And the family showed up. This is before the pandemic, so you could have meetings. So the whole family showed up at the office. And actually what it was the founder shows up, and we were having this process we call a workout. Well, the founder's mother shows up. Okay. And, the mom takes over. So mom takes over the meeting. So I'm like, okay, I thought we were negotiating with the founder. We're really negotiating with mom. And so anyway, we learned a hard lesson. Don't have mom come to the meetings. So you just gotta be, because what mom wanted was to protect her son. And she, she thought we were like on Shark Tank or something. So she got mad at us. But you gotta, there's certain things you learn in the process.
Thanks for sharing all that. Appreciate it. Got a lot more questions here, so we'll see how many we can get through. So you specifically had mentioned, founders that were women, founders that were people of color, and so we have a question in that regard. So knowing the challenges that women and people of color face with obtaining that first $100,000 investment, you mentioned the philosophy of you expect folks to have already quit their job and started the company before they could attract, before you'd be interested in investing in them. So, the implication of this question here is, that approach can be more difficult for founders that are women and for people of color. What are your thoughts or suggestions as an alternative to that approach or to such founders?
Well, look, it's a couple things that I would just say. First, if you're just sort of getting started and you're not sure what you need, I would join an accelerator, an incubator. I'd get with the university, the Small Business Development Center. There are programs around, Techstars, you name it. Many of them are online that are just there. In many cases, they're free. Worst case, reach out to us. We've got a Rolodex of programs around the Southeast and the country. We've nominated teams to go and get the basics, get the fundamentals around finance, get the fundamentals around product development, the fundamentals around how to roll out a class of products. The second thing I highly recommend this is go start a relationship with people, angel investors and VCs before you need money. So reach out to them, ask them questions, email them, Zoom with them, pick their brains. And then when you're ready, you've already got a relationship. I can't tell you the number of people that we have a pipeline, and there's a category in our pipeline. It's called boomerang. Okay, we track all the deals that ever come in, and there's a category called boomerang. Boomerang is actually a good thing. Okay, why? Because this is a person that came to us and we said no, and then they came back. We like those people. Why? Because they stuck to it. Then second, they had the courage to come back. And the other thing is, we want to see if they actually, we give advice. We never just say, go away, don't come back, God help you. We say, look, here are 4 or 5 things that you probably should do. Here goes, tap into these resources. When they come back, we ask them, did you do those things? So it's a relationship. It's a learning process. And we're looking to see if the team is committed to go through the process. So build these relationships, talk to angel investors, talk to as many entrepreneurs as possible. This is like anything else. It's networking, it's referring people. I wouldn't get frustrated if someone says no. But I get real frustrated if they say no, and I'm not going to ever talk to you. Ask them, tell me what it would take. And usually they're going to be very specific about the things you need to do, the people you need to. Ask for a reference, ask for contact. You can't be defensive. You can't, take it personal. Life is, it's like anything else, you sort of can't pick it until it's ready. And most times people are trying to help you get it ready because, myself and other VCs, we want to invest. And I would just be very smart about building relationships and reaching out to, and there's so much free help now online, and showcase that when you go into a VC, let them know, here's all the stuff I've done. Here are all the people I've, worked with and the programs I've gone to. And then be realistic about what you're asking for. I mean, we see a lot of projects that, are barely an idea and they're asking for $10 million. and you sort of got to have something, at least a plan to invest in. Okay.
That's some great advice. And I would just throw out there, Start Gnv exists to provide some of that help. So for any aspiring entrepreneurs or first-time entrepreneurs in the audience, Start Gnv is a nonprofit providing a mix of direct help through networking and through mentorship, as well as with events and so forth. So if you're looking for a way to start breaking into that networking process, feel free to reach out to myself or to anybody at Start Gnv. I know y'all actually do a number of events and community gatherings in Jacksonville, if I understand correctly, as well, outside of the context of just the fund that you run. So I know you have some events that you run as well.
Yeah,
so
just one point on that. One of the things we ran into many years ago was this is before people were sort of talking about diversity. We were not getting women to come to our firm asking for money. So some of the young women in our office said, well, why don't we put a program just for women? So I said, okay, well, let's try that. Maybe that'll work. And I don't know, 5 or 6 women showed up, and we had a little class about venture capital. The next year, 25 women showed up. The next year, 100 women showed up. The next year, 200 women showed up. The last time we did this in person, 250 or 300 women showed up. Right now, and part of this was the networking effect. It had nothing to do with me. It had nothing to do with money. It had everything to do with there were other women, success stories in the room that had been there, done that were sharing their stories. So my advice is there are so many success stories out there. I mean, you don't have to come to me. I mean, there are a lot of people of color and women that are willing to share their story. That program became the Female Founders Forum. That's probably the most successful program we have in our foundation. We also have another program. It's called Leadership Week. It's every October. There's about 50 entrepreneurs hand-selected to come in. It's fully sponsored. It's room and board for 4 days. It's a very intense program. And it's all about leadership. It's all about how do you go from being a founder to CEO? Because being a founder is just like, I'm named myself. CEO is the people chose you now as their leader. And there are a different set of skills to do that. And we believe so strongly in this that we created a program that's fully funded. It's every year. And that's in our program. We're going to do another program next year in 2022. It's called Black Entrepreneurs Forum, and it's modeled after Female Founders Forum. And we're going to give stage to African-American entrepreneurs to get in a room with dozens of successful VCs and successful entrepreneurs. See, because part of what creates the next role model is a role model. And we've learned that through the Female Founders Forum. We're going to do it for the Black Entrepreneurs Forum. So we're big believers in giving back in our community. We're big believers in leadership and role modeling. And, it takes money to do it. But what we also believe, if we make the investment in people's lives and their skills, it'll make them a better entrepreneur. And oh, by the way, you get a better return when you invest in the entrepreneur. And that's our philosophy.
Hear, hear. That's awesome. And I saw that Christine just shared into the chat a couple of the links to some of the programs that you run. So anyone who's interested in looking into those programs, please check it out there. Another question came in. This is back to kind of the selection criteria of, in a founder perhaps, or, for a startup that has done the things right by the time you invest, what does that look like, either in the founder or in the company? So, what have they done right, and what are the criteria from a founder standpoint that you like to see?
Yeah, well, look, I mean, I mentioned that we had a program today. We have a step in the process of selecting an investment. It's a step one is sort of a filter exercise. Step two is a deal review. It's like a 30-minute meeting on Zoom. Then there's a financial review, and then there's something called a workout. It's a 4-hour meeting. It's like a 4-hour Shark Tank. And it's like 8 of us surrounding like 2 founders. So it's very intense. But But what's great about it is we get to know the founder. We get to know what they believe in. We get to know what their reason for doing this is. We get to know what their level of passion is. We get to know, are they coachable? We get to know, can they adapt? We also get to know, can they handle pressure? And I will tell you, that's 90% of our selection process is the founder. Because we would much rather have a person that's coachable, adaptable, can pivot, can learn, that's open to new ideas, that's gutsy, than a good idea, right? That's like, we see good ideas all the time. All right, great ideas, unbelievable ideas. Okay, but our team will tell you, we invest in the founder because the company is going to change. The minute we invest $500,000, that is a different company the very next day. It's got marketing money, it's hiring marketing people, it's spending money on Facebook. I mean, it's a different, the website is different. The question is, can that founder grow with the acceleration rate that we just created with that investment? And, we're looking for a level of maturity. And we've seen some amazing reactions because we always ask, why are you doing this? What's your purpose? Who are you? Tell us something that you've done hard in your life. And it can't be, I fell off my skateboard and I got up. That's not, we're like hard things where you were rejected and you thought you were a failure and you came back and created this. So that's we look for that. I know it sounds simple and sort of trite, but that's why? Because entrepreneurship is difficult and it's more than about money. It's not an overnight thing. It's commitment. And we love those people that they're driven by something that happened in their life. I give an example. There was a woman we met, she built this 3-dimensional unit to teach kids how to drive. And it was unbelievable. It rumbled, it kept it's like a Disney ride, but it was, designed to teach kids, right? And it was inexpensive. The counties had cut driver education money. And she stepped in and was offering this. She was raising capital. She was doing really well. And I asked her, why are you doing this? I mean, you're smart. You could do a lot of things. You go design the next ride for Disney. That'll make a lot more money. She said, no, the reason why I'm doing it is because my next door neighbor's son was killed in an auto accident. And I never want this to happen to another family. And by the way, he was killed in an auto accident because he was underage driving. He hadn't had a lesson and they didn't have the money. And it was a story, right? And she's like, I'm never going to let this happen to another family. Now she's gone on to be very successful. NASCAR sponsors her program now. It's that popular. But, if it's something like that, when I listened to her tell that, I knew she was going to be successful. She was going to be committed. She was going to see that through because there's a reason for it. So anyway, we look for people that want to change something, not just go make money.
That's powerful. And I think you also said a powerful phrase a few minutes back, which was betting on this founder. Will they be able to improve at the same rate as the startup, right? As the startup is accelerating, as the startup is scaling, will this founder be able to grow into that role that you need? And I think that's a powerful concept as well. Another couple of questions that are coming through here. So one is, how late is too large or too late to be of interest to you? Just one more about investing here. And then there's a few of a different nature I'll ask afterwards.
Yeah, too late is, first, if you're seeking, over $1 million, it's probably outside of our range, unless we're going to co-invest with someone else, right? So if you've got a lead investor, you need $1 million to round it out. But $1 million is sort of our, level of seed investment. The other thing that I would just encourage the teams to do is money. Not all money is the same. So venture capital money is for high risk programs that have a high return. Banking money is lower risk projects that have a lower return. And banks don't take equity. VCs take a lot of equity. So if you say, I don't want to give away any of my company, then the question is there a lower risk profile that I can have with a different type of institution? So there are other ways to get money. I find people come to VCs because they saw Shark Tank and they go, well, you know, they showed up and asked for money, so I'll dress up and do Shark Tank. Well, it's that, you know, for it to be a return to a VC, the company has got to grow 100 times the size that it is today. So is your company going to grow 100x? Well, no, it's not going to grow 100x. Well, then it's you probably got to go get friends and family or bank money, right? Well, and there's nothing wrong with it. It's just, that's what it is. But if you see your company being 100 times, 1,000x, and you can return to the investor 10 times their investment, it's probably interesting to a VC. So you just got to think about money. Not all money is the same. So, you know, and I'm a VC, and I'm saying don't come to VCs unless. You know, so, but it's just advice that I would share with the group.
Yeah, I think that's really helpful. That's a great distinction. Just a last call for questions, because there's already a bit of backlog and we only have 8 minutes to go. So if you have any, feel free to send them in now, because otherwise we're already probably not going to get through them all. But this is great. So there's 2 questions that came in that are pretty similar. So I'm going to ask both. One is, with all the excitement around the growth and success and the new fund, what do you see as the #1 challenge that you want to tackle over the next year? And the other one, in a similar vein, you know, what are the goals you have set for yourself? And for that matter, is there anything that PS27 needs help with to hit those goals? So kind of 2 different questions. What are the goals, or what is the challenge you're aiming to tackle, given, you know, all the positive momentum that PS27 Ventures has here?
Yeah, well, what's going great is we're getting to see some just wonderful projects, new companies coming to us that that we hadn't, you know, a couple of years ago we were not seeing. We're just seeing it's. I'm very proud of the work the team has done to build an outreach to different organizations in the community, and we got a pipeline process that's working just wonderfully. The challenge, to be totally honest, is investors. So investors, you have to manage investor expectations. So we're on a roll, right? And investors are like, okay, you know, how are we doing? I'm like, we just got started. So that's like my #1 challenge, is tamping down investor expectations. The markets are hot right now. There's a lot of capital flowing. So just managing investor expectation, because some of these companies are selling at very high multiples, particularly in FinTech and some of the software companies. And that they're also companies that are getting high valuations coming in, you know, very little traction, and they're raising $15-20 million, and their valuations are 100 million, and they're tiny little things, right? And so our philosophy is a little different than Silicon Valley. We don't sort of like, you know, build it and they will come, which is how the West Coast does it. So we tend to say, look, let's think big, but start small. And let's be very disciplined about the road ahead. And once we prove the model, prove market fit, now let's pour on the gas. But there's some places, you know, some of these bigger markets, they pour on the gas, strike a match, and, you know, the place burns down because, you know, they've overheated the growth. So we don't. So I have to manage investor expectation because people are reading the news and they're thinking, oh my God, we ought to be selling these things at a much faster rate. So that's the #1. The other challenge is we've never done a fund before. So we're having to build a back office, a set of resources to keep up, and that's new, but we'll figure it out. It's not, you know, we got a good team. We figured everything else out.
Well, from what I know of Christine on your team, who's now a board member of Start Gnv, I think you have a great squad around you. So that's awesome. Exciting challenges ahead. So normally, since most of the folks we've had on this series have been local to Gainesville, you know, we usually ask them some variation of the question of, what does Gainesville's ecosystem need, or what do they see, for the startup community here, the tech community here. So you can answer that either on behalf of Jacksonville, or you can broaden it to include, North Florida. I don't know how well you know the Gainesville area, but yeah, would love just to hear your take on, kind of the state of tech and the startup innovation ecosystem, either in Jacksonville or in North Florida, and kind of what's going well and what's still necessary.
Yeah. Yeah, no, I think things are going very well. I mean, I feel good about it. We wouldn't have done the fund if we didn't feel good about the marketplace and, both on the, innovation side and also the investor side. So we feel great. We think the timing is great. I think that what you guys are doing is complementary. It takes a village to pull this off, right? So it takes some of everything. People think it's just money. No, we need 5 of me in Jacksonville. We need $100 million fund at PS27. We have 20 million. We need $100 million. So that's what we need. So there is enormous amounts of innovation. We'll look back on this in 25 years, and this will be the biggest explosion of innovation in 100 years. And it's primarily because of, what's happening still around the internet. The penetration of digital and the internet. It's not done yet. It's in our lives. It's in machines. It's going to be in our thinking. It's going to be in every aspect. We're not finished with that. And that's going to sprout. It's beginning to sprout all kinds of new ways of living, new ways of working. I mean, just think about how work has changed in the past 12 months. I mean, I used to be on a plane traveling. I mean, it's totally different. And by the way, some of these companies have grown 400%. We've got a company that is in the restaurant space. They thought they were going to die when everybody stopped going to restaurants. Their business grew 400%.
Wow.
So we've learned how to grow really fast in this sort of constrained kind of environment. And by the way, it's the new way of living and working is this normal that we've adapted to. And that's just making people think about, well, what else? Like voice. So like we think of swiping and touching and single sign on with your fingerprint. Well, what about your voice? Activating everything in your life. How you get in your house, how you get in your car, alerting people that are relatives, distant. So, I mean, just the beginning of voice and biometrics in every aspect. So we're not going to carry cards and wallets, and in many cases, we're not even going to carry a device. We're going to get somewhere, and the virtual device is going to be there for us to do our work. We're going to be lugging a laptop around. So anyway, I mean, like briefcases. I remember I used to have briefcases years ago. People would buy me briefcases, and I don't even know where my briefcases are. We're not even going to know where our computers are, right? They're going to be where we are, right? So all of that is coming. And so why do I feel good? It's because somebody is going to invent, someone is going to invest, and someone's going to get a return. We've chosen that side of it. Universities, all of the government organizations are in this game now. And in innovation, when I was at IBM, we used to invest $6 billion in R&D. And that model was sort of a closed model of R&D. Well, R&D today in a company, small or big, is open. What does that mean? You're going to get ideas and innovation from outside, from the crowd. You're going to get it from partners. You're going to get it some from the inside. The minority of your new ideas are going to come from the inside. So you got to be connected to the outside. You got to be in the ecosystem. So companies are going to be working with Start Gnv for new ideas for their company. So it used to be the other way around. You're working on the inside and you pay a bunch of engineers. You can't keep up on the inside. And by the way, the smartest people are not on the inside. They're on the outside. They're freelancers. So I'm excited. And I think the only thing we need is just more technical talent moving to our marketplace, because these inventions require a lot of smart technical people, to make it happen. And we just need more. And the more we have to populate these companies, the better off we'll be. The money is coming to Florida. I'm not worried about that.
Here. It's compelling vision, and I loved your quote, an explosion of innovation, unlike anything we've seen in 100 years. I think that's very inspiring. On the note of more money coming, obviously your fund, that's very exciting, and a new contribution to the ecosystem. The recently announced the Gainesville Technology Fund, which is a sidecar to the Central Florida Tech Fund. So that's a new $5 million sidecar on a $50 million total fund that they're in the process of raising. So that's a new entrant into the ecosystem, and it's great just to see every little bit, bit by bit. We'd all love for it to be, like you said, 5 times or 10 times as much, but still there's been meaningful progress even in the last year with the pandemic, new funds, new startups, new energy. So I appreciate you coming on as a guest here. We could keep talking for hours, but I know we're just at about time. I would love for everybody who's willing to turn on their cameras, and as a thank you to Jim, we're going to take a little photo just showing everybody here in the AMA chat. So anyone willing, please turn on the cameras and wave or smile or something, and we'll get a nice little screenshot here thanking Jim for his participation. Let us know, Christine, whenever you're set. Awesome. Oh, 3, 2, 1. Here we go. Good deal. So thank you again, Jim Stallings from PS27 Ventures. Very exciting with the new $20 million fund. So many questions we couldn't get to, so maybe we can have you on again, maybe 6 months from now as a checkup. You can give us the update on how the first wave of investments has gone. Again, this is Start Gnv, the organization focused on growing the ecosystem around innovation, tech, and startups in the greater Gainesville area. I'm Aidan Augustine, a board member of Start Gnv and the co-founder of Feather. Anyone who's interested in learning more about PS27, you can see their links in the chat. Reach out through the website to Start Gnv. Feel free to contact myself or any of the other board members, or reach out through our website or social media. Any other announcements that I missed, Lauren? We good? All right. Thank you again, Jim. Really appreciate it.